All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And also, if you download the free ebook, you will be put into my email distribution, and you'll start receiving my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time, where I talk about everything from the world of finance, economics, and also from time to time, I give crypto recommendations as well as stock investment recommendations. So you definitely want to be a part of the Cubicle Weekly readership. All right, so today is November the 19th. Today is November the 13th, right? Sunday. The market is actually closed. However, what you see on the screen is the trading platform Thinkorswim. And so Thinkorswim has a feature called On Demand. And so On Demand allows you to go back in time to look at trading sessions that have already taken place. So I'm looking at the trading session that took place on November the 10th, right? So as you can see here, this here is me actually going back in time and looking at so I'm using the on-demand feature. I'm going back in history on the Thinkorswim trading platform, and I'm rerunning that trading session. So November the 10th was when the CPI number came out. So the Consumer Price Index number is a metric that is used to determine the rate of inflation. Okay, so it came out on November the 10th for the month of October. So analysts were actually anticipating that the number would actually be a lot higher, well, not a lot higher, but slightly higher than the 7.7% that was conveyed on November the 10th. So this was a good news story because it was actually 0.5% lower than the previous month of September, right? And so because this was a good news story, so now the CPI number, or the Consumer Price Index number, this metric comes out 1 hour before the market opens. So it comes out at 8:30, the market opens at 9:30 a.m. Eastern Standard Time. And so when the market opened an hour later, because of this good news story, right, the market immediately out of the gate skyrocketed, and it jumped 111 points. So the previous day, November the 9th, the market closed at 37.48. Now, because of the good news story of the CPI number being slightly lower than what the analysts had anticipated, and quite a bit lower than the previous month of September, when the market opened, it jumped 111 points. Now, this is very unusual for the market to move such a great distance in a short period of time, and also particularly right out of the gate. So it's rather unusual. So if you viewed my previous video where I talked about how I did some research going back, I don't know, maybe 20 some years, where I looked at the average move of the SPX during a trading session. So the average move was roughly between 50 and 60 points per trading session going back 20 years. Right, so if you want to see that video, I have it down in the description. You can check that video out at your convenience. But nevertheless, so considering that the market was already up 111 points, it was at 38.59 where it opened from its previous close of 37.48. And so what you see here basically is me rerunning that particular trading session. So November the 10th. And so as you can see here, let me just remove all of this stuff out of the way. All right, so as you can see here, so this big candlestick here represents that large move right out of the gate for the SPX because of the good news story. So it had moved up, it had jumped 111 points. And so considering that this was a pretty extreme move, I figured that, hey, that was pretty much the entire move that the SPX would experience during this whole trading session. And so what I did was, I'm gonna go to, sorry about that. I'm gonna go to the trading platform that I use to teach from. So as you can see here, just going back real quick. So the price is at 9:50 a.m., right? So 20 minutes after the market opened, the price was at roughly 38.90. So you can see there at 38.90, right? So considering that, on average, the market moves roughly between 50 and 60 points per trading session, I figured, hey, if the market is already at 38.90 and it has already moved 111 points, I certainly should be, and I'm just using, so this here is November the 14th, which is tomorrow, Monday, but I'm just using, this particular platform to convey the position that I had on November the 10th. So I was at 39.50 and 39.60. Now again, the price is at 38.90, right? So we're talking about the price being here after jumping 111 points, the price being roughly here about 20 minutes after the market opened. So I figured, hey, this thing is not going to continue to move up much further, considering that it's already at 100, it already jumped 111 points. So I should certainly be safe at 39.50. I sold at 39.50 and I bought the 39.60, basically selling a vertical credit spread on the call side. Now, the other thing that I look at is, I pay attention to is the 11 sectors, right? So the 11 sectors that make up the S&P 500 are here, right? So you got the technology sector, you got the healthcare sector, you got the financial sector, etc. And so every sector was in green, which made sense because the market was up 111 points based upon the good news story of the CPI being lower. And I also looked at, I also pay attention to the advancing issues minus the declining issues and look at that difference. And so that basically looks at the number of stocks that are increasing minus the number of stocks that are decreasing on the New York Stock Exchange. So now this was up roughly, it was over 2,000, which is significant, right? Because anytime you see, I won't say anytime, but for the most part, anytime you see this particular indicator over 2,000, that's a major bullish sign. Also, there was a lot of volume coming into the market, right? So a lot of market participants were buying stocks, forcing stocks to increase in value. And then the ticker symbol was also, pretty much above the zero point, basically conveying that there were more stocks rising on the New York Stock Exchange versus declining. And so anytime this particular indicator is primarily above zero, then that means that that's a bullish sign, particularly if this reading here is above 500, which it was. When that reading is above 500, then that's extremely bullish. So everything was pointing to bullish, being bullishness, if you will, right? And so, but again, I'm still thinking, hey, it's already up 111 points. I should be safe at 39.50 and 39.60. Well, if I speed this up here, let me see if I can step forward. Yeah, I'm gonna speed this up to roughly 3:30. 3:30 on November the 10th. And I'll show you where the price was at during that particular time. Got to give the platform time to catch up or finish buffering. So as you can see here, it's still at 11.14, so it should eventually show 3:30. All right, it's not showing 3:30. All right, so I had to cut the Thinkorswim. I had to close out Thinkorswim because the on-demand feature wasn't actually cooperating. So I'm just going to use barchart.com. So this here is essentially the trading session for November 10th, and we're looking at a 5-minute chart. So each one of these candlesticks represents 5 minutes of price action. Okay. So remember, I was at, so my position, because I thought I was safe because the market had already jumped 111 points right out the gate. And so my position was, let me just, so my position was on the call side, right? On the call side, I had a vertical spread on at 39.50, right? So that was my short strike. Let me just change the color here. And then I sold at 39.50 and I bought the 39.60, right? So that was my vertical credit spread on the call side. And so I got into that trade roughly around 9:45. So, and I normally don't do this. I normally don't get into a trade until maybe after, an hour or two after the market has opened. But considering that the market had jumped up so quickly and it had moved so far from its previous closing price, I figured, hey man, that's pretty much the entire move. But again, I am overlooking the fact that the market is fiending for any kind of a good news story because, capital seeks the highest return possible, right? And so the highest return that one can receive on his or her capital is primarily the stock market. And so any good news, considering that we are in a very volatile period right now with the high rate of inflation, any good news story is going to cause capital to jump back into risk assets, right? Which are what stocks are, risk assets. So, the market is up 111 points, but, I'm thinking I'm okay because, the market only really primarily moves between 50 and 60 points. But I'm not, I have, for whatever reason, ignored the market sentiment or the area or the period of time in which we are in, right? So, as you can see here, as I hover over each 5-minute candlestick, and if you look up here, you can see the price increase, right? So here's your open price, here's the high, here's the low, and here's the close. So you have 4 price points for a candlestick: the high, the low, the open, and the close, right? So you got 4 pieces or 4 price components of a candlestick. And again, each one of these candlesticks represents 5 minutes of price action. And so as I'm going up, as you can see, the price is consistently increasing. In spite of the fact that it was already up 111 points when the market opened, it's now 3:10 on November the 10th, right? It's now 3 o'clock, it's 3:10 p.m. and the price now is at 39.37. But again, I'm still thinking that, this thing is going to pull back or begin to trade sideways at any minute, right? So my ego is telling me, stay in the trade, Eric. It's going to pull back at any minute. But nevertheless, the advanced declining indicator went from 2,000 to 2,500. So extremely bullish, right? But again, I'm seeing this, but I'm experiencing cognitive dissonance. I'm not paying attention to what's actually happened. I am seeing or thinking what I want to see. I am believing what I want to believe. And so as a result, I am looking at the price increase, but continuously thinking that the price is going to pull back at any moment. And as you can see here, as I scroll, as I hover over, you know, the candlesticks, it's now we're now at 3:30 p.m. Now you can see the price is at 39.42. So roughly 8 points away from my short strike on the call side, right? So I'm still thinking that it's going to pull back at any moment. And so lo and behold, we're at 350, right? So this here is the candlestick at that takes place at 350, a big, huge candlestick, right? So, you know, more liquidity, more buyers coming to the market at the last 10 minutes before the market closes, you know, pumps the market up even further. And when the market finally closes, it closes at 39.57, right? So what does that mean? 39.57 puts my short strike, let me just change the color here. Man, let me put that back. So at 39, I was at 39.50, right? And then the other one was 39.60. That was my long option. And so it closed at 39.57, and so that put my short. So the price was roughly here. You know, if you can imagine me doing this on the trading platform. So the price, so it put my short strike in the money, right? So anytime the strike price of your option contract on the call side is less than the actual price of the underlying being SPX, it closed at 39.57, right? You lose money, you know. So essentially, I lost $1,310 on this one trade. You know, it killed my winning streak. I was on a winning streak of probably I went 3 weeks without losing a trade. And so I was overconfident, you know, my ego, you know, got involved. I was not actually processing what the market was telling me. The market was telling me that, hey, you know, we may be up 111 points out of the gate, but we're going to continue to go higher. And we're going to show you that we're going to continue to go higher. And you decide whether or not, you know, you want to stay in the trade or close out the trade for a small loss of $120. I could have closed this trade out easily at around 315 for a loss of, I think it was $113 or something. You know, but again, you know, being on a winning streak, being overconfident, not really processing correctly what I was seeing, the market, what I was seeing from what the market was telling me. I stayed in the trade too long, and I ended up losing, you know, $1,300. You know, so the moral of the story is, you know, trade what you see and not what you think.